This is Paul with OUTPACEsys, and this is our report for the week ending on the 5th of September 2008. As usual, we'll give you a status of our trades performance for the week, we'll summarize our current signals, and we'll finally show the market behavior last week with our performance comparison charts and our weekly performance chart. The trend updates we discuss here give the general sense of the market trends. As such, we don't recommend you use them yet to actually open real trades. Specific trades can be derived from our real-time alert signals, which are generated after detailed timing analysis and distributed via email. What a week this has been! After a brief spike up on opening Tuesday, the equities markets started a nosedive that lasted all week. Our indicators did a great job once again. We had a signal to go short on Tuesday and were able to capture this big move in its entirety. In the mini S&P case, this translates in 60 points or $3,000 per contract. Not a bad move. The Nasdaq 100 market had a similar behavior, although its move was even sharper. Here too we had a signal to go short early in the week. What made the market's behavior rather surprising this week was that not only the equities went down, crude oil and gold did too. And what a fall that was. Crude oil gapped down on Tuesday and kept going down all week. It seemed to respond quite beautifully to the signal to go short that we had on close last week. Great work here too. Gold's fall was a bit less sharp, but significant nonetheless. We have been short on gold since the middle of last week, when gold started to go back after its recent bounce down in mid-August. Sectors and several key ETFs saw much of the same. As an example, here's biotech, losing 10 points in the week. You'll notice our signal to sell, posted on Tuesday in this case too. Materials did much of the same. So, all in all, Nasdaq lost almost 6% this week, and the Dow Jones and the S&P lost about 3%. The 3-month performance chart shows how much harder this fall has been for the Nasdaq, which had posted a nice 7% gain several weeks ago. The year-to-date chart shows that the Nasdaq is still performing better than the Dow Jones and the S&P, which are down 15% versus a minus 10% for the Nasdaq. The individual weekly price charts for the Dow Jones, S&P and the Nasdaq show all indices back below short-term support. The key question is this just another period of range trading, or is it a major market fall in the makings? In the meantime, government and industry bonds are continuing their slow climb and can only benefit from the turmoil in the equities market. With the exception of consumer staples and financials, all sectors had a negative week. Energy lost an ugly 8% and several others were down 4 to 6%. On the year-to-date chart, it is interesting to see how the financials are continuing their up move and have recovered to minus 25% from the severe minus 40% just a few weeks ago. On the international arena, Taiwan and Australia both lost about 10% this week. The year-to-date chart shows the continued long-term down move that's affecting practically all of the countries that we're following. Now, the exciting factor last week was the contemporaneous fall of both equities and commodities, such as crude oil and gold. Crude oil in particular had a bad dive of 8%. Gold lost 3.5%. The year-to-date chart is particularly loud in showing the fall experienced in the crude market, which went to plus 10% for the year so far, sharply down from that astronomical 55% gain it had reached in mid-July. We have to repeat the question we asked before. While crude oil lost about 40% lately, the price of gas at the pump has not been changed nearly that much. We don't quite like that. Anyway, the weekly price of oil shows the gap down. Should we expect a bit bounce back now? No formal signals yet, so hold on before you make any move. The same is true for the gold chart. This is it for this week. Thank you very much for checking in with us again. If you enjoyed this report, we hope you will share this video with your friends, as well as our website, OUTPACEsys.com. The link is on the right on the screen. Please visit OUTPACEsys.com, where you can find past editions of our weekly reviews and full details on our trading system, our approach to the market for incredibly profitable investments, and the services we provide. As usual, we'll see you online next week. Happy trading!